Hey, all three of you, friends and family. It's time for Mr. Todd's class. It's been a while since I've done a digital asset update. It's April 2023, and it's been a wild ride. We are perhaps exiting the crypto winter, the big bear market. It was the best time to accumulate, to invest, and now we may be seeing the beginning of another cycle, a bull run potentially. But what matters most are the fundamentals and where we're going and how these tools and other tools can help our society because things are pretty crazy out there. So let's jump right in there. First of all, you can see here some of the cool art of that first slide, for example. All of this was done with AI. I just wanted to play around with some different images related to this concept of having an online class. And so on the left, that cartoon image of a classroom, I typed in each of the three walls we can see are different. One has space and the other cosmos, the other financial charts, and one has nature. It only pulled off two of the walls, but still looked really cool. And then the other one, I typed in classroom full of diverse adult learners looking at chalkboard, but instead of chalkboard, there are a bunch of symbols and information and curiosities, digital art, bright and happy. And I did that in the Bing image creator. Shout out to Bing. I didn't ever think I would say that in my life, but I did. So Microsoft's using all that Chat GPT and DALL-E AI, and it's mind-boggling. So maybe we'll talk about that in another video specifically, but it's crazy how fast that technology is taking off. So I want to branch out into other things besides crypto, but this is one of my biggest passions at this time. And this isn't something I generated with AI, but I believe now that some of these media outlets for cryptocurrency and Bitcoin have been using AI image generators way before they went public, because I've noticed that it just like, how are they coming up with such original art all the time? Now I think I know why, collaborating with artificial intelligence. So yeah, Bitcoin is pumping up a little bit again. It pumped last week, and then over this recent weekend, we saw a crazy red candle. And then now with the latest bank potential failure, looks like the bears are disappearing and Bitcoin is like, I'm back. So, I'm not your financial advisor. Look at me. I'm not even driving a Lamborghini. I drive a 2014 Honda Accord. So don't take legal or financial advice from me. And so today's topics, we're going to go quickly, 6 of them. Reminder, the what and why of Bitcoin. Number 2, Bitcoin price action. I made these slides like a week and a half ago, so they're not as up to date, but we'll talk through that. The current macroeconomic factors, my current holdings, to kind of just be transparent with the things that I think are worth purchasing and holding on to. And then what is this halving, the Bitcoin halving, and what to look for? That's coming up next year. And then long-term strategy. So let's remember the what, and the why of Bitcoin. First of all, it's a form of digital currency. It's a lot like asset, but it also behaves like a commodity. And it looks like the government is going to consider Bitcoin a commodity and not a security, which means it's a lot less risky than we may have thought in the past. Next, banks are scaring us. So Bitcoin aims to eliminate the need for central authorities such as banks and even governments eventually when it comes to money. It uses blockchain technology to support peer-to-peer transactions. So since banks only insure up to $250,000 in cash, why would you want to put your money, let's say $10 million, they're only going to give you a fraction of that if something goes really south. And of course, the bank that's currently going bad, which is, I'm going to forget the name of this, but First Republic Bank, I think is what it is. They already got a bailout from the government a few weeks ago, and now they're still struggling. So what does that tell you? A bank failure is one thing, but the failure of a bailed out government bank, that's even scarier. So yeah, Bitcoin would stop us from needing those intermediaries that aren't trustworthy. Sorry, I got off on the wrong screen here. And then number 3, for why Bitcoin is your Bitcoin ownership is safely recorded, stored, validated, and encrypted on the blockchain. To date, no cryptocurrency has been stolen by altering the information on the blockchain. So sure, people get hacked, they lose their pass keys, all kinds of things can go wrong. But one thing that's never gone wrong is somebody actually breaking Bitcoin. If you know how to manage your pass keys, your Bitcoin is far safer than any physical commodity or asset, excuse me, that you could put in a bank, because that could be stolen, burned, etc. And then finally, it's an effective hedge against inflation. This is TBD, to be determined, but with the bank failures going on, we're beginning to see the de-dollarization. You may see that in the news. Us Bitcoiners have been talking about that for years, and anyone who really understands money understands that we need hedges against inflation. So that's real estate, that is stocks and equities, and then maybe just a percentage or two of your wealth in Bitcoin. That's what a lot of people are beginning to do, and that's what's driving this narrative of Bitcoin as an effective hedge against inflation. And then finally, we got to remember that Bitcoin disrupts many of the systems and businesses that are used by the rich and powerful, who use it to make and keep money and power. So Bitcoin is designed to be a truly fair and level playing field. It's not, however, like you see with some extremely liberal politicians and governments when they want to give the money away to everybody. It's automatically set up to be fair, even in a free market system. It's a way to safely store your energy and your labor that doesn't get deflated by the government inflating money. So I know that might be boring, but that's the quick review. We got to remember why Bitcoin. So moving on, Bitcoin price action. So we saw back in December 2022, Bitcoin at 18 and then at 16 grand around the new year, which was an amazing place to buy. And now it's doubled. It's worth, at the beginning of this month, it got to $30,000, 500. As of today, it's right back around $29,000. So in December of this year, most say our average will be around $35,000, not a huge pump, but some are calling for Bitcoin as high as 55 grand. Of course, there's crazy people out there saying it's going to be worth $1 million soon. Others are saying it's going to zero, but fact is, most people who analyze these markets and who are much smarter than me are saying between 25 and 55. So let's say $35,000. So there you go. But let's not forget, we are here where that red arrow is. And Bitcoin is going to likely, very likely, I think for sure, personally, in my opinion, not financial advice, but Bitcoin will beat its previous all-time high. It got up to about $70,000. And so we're looking at Bitcoin over 70 grand. So if you bought right now, you'd more than double your money. It's just you don't know when it's going to do that. But we'll talk about the halving next year and why that matters. So Bitcoin price all time. Here's a little chart that shows you that, by 2030, most averages say that the low by then will be about $270,000, and the potential high $347,000. So this comes from Coinopedia. There's a lot of different price models out there, but I get excited about this stuff because when you realize that Bitcoin, even just to double your money, if you're someone who wants to take $10,000 and you want to double that, you'll have to pay taxes. But if you're just looking to make some quick money, I shouldn't say quick, but midterm money, then you might invest in Bitcoin and just swing trade it and get it back into cash in a year or two. If you're more like me, I'm holding on to most of my Bitcoin forever, and I will take some profits once it really starts to go up. But the idea is not to make money overnight like people try to do out there with other much more speculative cryptocurrencies like altcoins. And I'm not really into that stuff, but hey, if you know for sure something's 100x, let me know. So that's the price action. Moving on now to, I don't know why I'm repeating these slides. I like Lark Davis. I follow him. He says, look, I get it. 2022 was brutal. I was definitely still suffering bear market PTSD at the start of the year. And I do remain cautious that this could be a 2019-like run in 2023. In other words, that we have a good run to $48,000, but then end the year lower. So for context, Bitcoin is still 59% below its all-time high. And if we were to speculate that it will at least double at the next all-time high, then there's still a lot of money to be made by accumulating even right now at 30K. So Lark says here, I wrote a quote down, you don't actually need to buy the bottom in order to make money in this market, just like you don't need to perfectly sell the top. In fact, obsessing over this is likely to get you into a lot of trouble. Catching the meat off the move is where most people can make the most money. Stay fluid, things change fast in this market, and we must strive to keep our brains moving at the pace of the market. So in the simplest terms, Bitcoin's going to go up. When and how far, we don't know, but it will come back down. So there's always opportunities if you're paying attention to the market or you're following people like me who are obsessed, then we can help you. And then Bitcoin could reach $300,000 to $500,000 in massive price eruption, according to macro guru Dan Tapiero. Here's why. He says he's doubling down on his prediction that Bitcoin will go as high as $500,000. He says, and I quote, "The view that I've held since the founding of the fund was that the value in the space, which in the middle of 19 was $300 billion, was going to 30x and get to $10 trillion. And that's why I called the first three funds, they were called 10T, which stood for 10 trillion. So he's talking about the total market capitalization of crypto, Bitcoin. So he says, I put my view of the growth in the space in the name of that fund. And so that was the 30x that I was referring to, a $10 trillion value on the digital asset ecosystem. Based on the way I'm looking at it, puts Bitcoin between $300,000 to $500,000 per coin, which is kind of been where I think it's going to end up. I thought that in 19, I think that now. So I think that might have been a quote from something he said out loud, because it's kind of awkward to read. But fact is, there are really intelligent people watching these markets who are big investors who manage funds, and they think Bitcoin's going to have that kind of price eruption. I hope, I wish, I'm not quite as bullish as that, just because I've learned to temper my expectations. But if that were to take place, there would be a huge wealth distribution in terms of where money is now currently concentrated with, that 1%, 3% of people. There's a lot of the hedge fund managers and so forth. You'd see a lot of people who've invested in Bitcoin would suddenly have significantly more wealth. And that's interesting. And then, okay, jumping on to current macroeconomic factors. Bank crisis. Warren Buffett says bank crisis is not over yet. He said that before the most recent bank, the First Republic Bank, started faltering again. So he was totally right. The Ukraine war, of course, just all the issues that creates, including the macroeconomic problems that creates between us and, say, China, because China's backing Russia and we don't like that. Plus, we have issues over in China. Anyway, Russia and China teaming up with India. Here we see Russian President Vladimir Putin, Indian Prime Minister Narendra Modi, and Chinese President Xi Jinping. I think I said that right. They're all working together more often these days. That hurts the U.S. economy, and in turn, it hurts the risk on assets like stocks and digital assets like Bitcoin. BTC, it must be mentioned, is resistant to resistance and is not a U.S. company or network. So let's not forget, Bitcoin isn't American. Bitcoin is just Bitcoin. And one thing that Vladimir Putin said recently is that they are beginning to mine more Bitcoin. And that kind of scares me, because Bitcoin's powerful. And I personally don't want Russia to have more Bitcoin than we do. But that's me. Then I think I went the wrong direction here. The bank crisis, U.S. and world recession concerns, navigating a new landscape. 100% expect geopolitical fault lines to continue realigning global economic activity. 63% expect global recession in 2023. I'm not a big fan of the World Economic Forum, but these numbers can't be ignored. Factors expected to have a significant drag on business activity, 91% weak demand, 80% high cost of borrowing with all the interest rates going up, and then expected business response to potential economic headwinds, 86% reduced cost by cutting operational expenses, 78% reduced cost by laying off workers, and 77% optimized supply chain. So it looks like a recession's looming, and that's what the government, I believe, wanted because of the inflation. So they'll raise those interest rates, kick us into a recession. At some point, they're going to have to start dropping interest rates big time, maybe go to 0% again. And then you watch Bitcoin and other risky assets just go insane. So just something to consider, accumulating some of these assets before the next big, fast run. And these world recession concerns would make you think that something negative is going to happen, which it will in the short term. But in the long run, the government will have to go back to quantitative easing, which means lots of people are going to invest in risky assets. So, and then finally, actually not finally, fourth out of the six, these last few go pretty quickly. I just want to share with you what I've invested in. Right now, I'm mostly Bitcoin at 76%. And then I have about the same amount of Solana and Ethereum, which makes up about 20% of the rest of that portfolio. Then Polygon Matic, which is an Ethereum scaling solution, a layer 2. and then miscellaneous altcoins. And so still heavy in Bitcoin. I personally, if the market pulls back or when we see, prices drop again after a run, or if this current pump is just, a fake out, then I would be looking to stack Ethereum and to continue stacking Bitcoin. And then at this point, I'll share with you what I find out, but I'm not so sure about the rest of the altcoins. There's a lot of confusion out there, in my opinion, about who's really the best. I think Solana and Ethereum are still amazing, but you have Arbitrum and some new ones as well. And then the halving. What the heck is the halving? So after the network mines 210,000 blocks, roughly every 4 years, the block reward given to Bitcoin miners for processing transactions is cut in half. Blah, blah, blah. What does that mean? Basically, it means that every day miners unlock Bitcoin. And that amount of Bitcoin that gets unlocked is going to be half of what it used to be. In other words, the whole supply and demand thing that we all understand, there will be less supply of Bitcoin, half as much Bitcoin coming out every day from the mining efforts, meaning they're creating the network, they're encrypting the blocks. So that's just going to create more demand. And that has historically had a massive impact on price action, making Bitcoin price go up. My understanding, based on my research, is that the price isn't likely to go up as much as it has in the past. Darn it, for those of us who didn't get in really early. However, it's still going to have a really positive effect on price. And that is all going to happen sometime around this time of the year in 2024. So sometime around April 2024. And I'm excited. And will Bitcoin hit $100,000 by 2024? The Motley Fool. Investors who bought Bitcoin after the May 2020 halving likely haven't seen great returns. To maximize potential returns, the data shows us that Bitcoin should be held for at least one halving. Although recent weakness in Bitcoin caused every portfolio to take a hit, current prices should be viewed as an opportunity to increase exposure before the next halving in May 2024. So they're saying May. Either way, the bottom line is it's not too late to buy Bitcoin. It's just the fact is most of us don't have a lot of extra cash lying around to purchase risky assets, right? And so will Bitcoin hit $100,000 in 2024? For this evaluation of Bitcoin's future price, the Motley Fool says they focused on those patterns, and they just basically said that halving events are what helps make Bitcoin so unique. Its code is programmed to ensure that the growth in supply falls with time. Since Bitcoin's code is open source, we can do a little math and find out that Bitcoin's block reward is cut in half. And then it says the first halving was back in November 2012, and that went from 50 Bitcoins a day to 25. The second was the summer of 2016. And the recent was just back in May 2020, and it went from 12.5 Bitcoins created to now just 6.25 a day. So the next halving will have us at just a little bit over 3 Bitcoins produced each day from mining. So yeah, just now you know what the halving is. Would I buy now if I had more money? Me personally, yes, I would. I would continue buying even at $30,000. In fact, if I didn't have any Bitcoin, I would buy a lot right now. And to be honest with you, my average cost for Bitcoin is about $29,000, $30,000 for a coin. That's my average cost for the amount of Bitcoin I purchased. And so, yeah, from 30 grand up, that's profit. And then, so had I waited, had I been more patient, had I known, I would have bought Bitcoin at 16K. So, $30,000 to me isn't a bad price for that reason. And I'm a little biased, perhaps. And then, yeah, so just to give you an idea, this is where we were, where we are. This had a lot to do, these huge drops we saw, 1, 2, 3, those were all those black swan events, wars, issues with interest rates, and then the FTX collapse was this massive red candle drop. So just gives you an idea. And then finally, the long-term strategy, Coinopedia. If we're looking at Bitcoin, I mean, this is from 2010 to now. You have silver, you have gold, you have S&P 500, and you have Bitcoin. Bitcoin has been a 48 million% return because it was worth basically zero, less than $1, and it's worth $30,000 now. So that just gives you an idea of the historical return on Bitcoin. So if anything like even remotely similar to this continues to happen as we go forward, investors in BTC will be pretty happy, I think. And then what will Bitcoin be worth in 2030? I looked at a ton of price predictions. Lowball 100,000. The conservative average price, $287,000. And then on the higher end, a bullish prediction, $3 million per coin. Conservative average, that's a 10x investment over the next 6 years or so. And this is the conservative estimate. So that's what people are saying. Now, you can go find lots of information about how Bitcoin is going to zero. So it depends. But this information is based on the technology as it exists and the use cases and the adoption curve that we see already beginning to happen. So yeah, money's evolving, and hopefully we can evolve our minds with it so that it's not controlled by just a few people. So that's it. It was a little longer than I wanted. Kind of a nerdy crypto bro kind of video. I didn't really mean for it to be that way. But if you've watched all my videos, I think this is the natural evolution of your understanding. So I will bookmark this thing so people can skip to the parts they want. And I hope this helps, friends, fam. Take care, and I wish everyone the very best out there. I know life can be very hard at times, so if you're going through a tough time, I send my well wishes, and reach out to me if there's anything I can do. I'm happy to do so. Okay, I'm out of here. Take care.